Hi there, guys. I'm Catherine Justice with Gentile Real Estate in Fresno, California. And here with me today is my counterpart, John Stone with Century 21 Select. How's things going?
Good.
Good, great. So last week we talked about interest rates, the type of loans you can get into. But one of the things we didn't talk about was what the interest rates really, the pain point of the interest rates, I guess is what I want to say, and how that is keeping buyers from getting out there and not paying landlord's interest rate. That's what you're doing. You're paying the landlord interest rate when you rent, right?
Right.
So how do we alleviate that pain for those buyers trying to get into the market?
Well, something that I think a lot of buyers don't know, they've gotten used to hearing that interest rates are way too high. And a little bit of background. When I bought my first house in 1991, interest rates were 7.5. Mm-hmm. When we came out of the crash, I think in 2013, interest rates hit a low of 5. We had to go back 50 years to find any rates that low.
Wow.
So the year of 2% interest rates is gone. It wasn't sustainable. It's not sustainable.
No.
Are they going back there? No.
Probably not in my lifetime, guys.
But what's really happened is about, 2 months ago, interest rates were over 7. I think you said you closed one where?
We closed one in Clovis for about $630,000, and the interest rate was 8%.
Wow.
And that was just in October.
Yeah. So they've come down already.
Right.
I looked a couple days ago, and they were 6.25 for FHA.
Yeah. Not bad.
But what people don't realize is there are ways to get that interest rate down. I just put somebody in a home at 5%.
And John, tell us how that happened.
So what we did is they had enough for the down payment and closing costs. We asked the seller for a credit.
Okay.
And then we used that money to buy the interest rate down.
Okay. Was this a 2-1 buy down, or was this a permanent buy down?
No, this was a permanent buy down. So do you want to talk about why you might do one or the other?
Well, sometimes it costs more to do a permanent buy down, okay?
It does.
So if you're trying to get money from a seller to actually give you the credit so you don't have to come out of pocket with that, it's a little less expensive for a seller to give you money to do that for a 2-1 buy down. And the 2-1 buy down, actually, John, why don't you explain the 2-1 buy down for us?
So it's simply, and when I bought my first home, the builder offered that. So the first year, the builder paid for 2% of my interest rate. So if my interest rate was 7.5, the first year I paid 5.5.
Okay.
And then the next year it was 6.5. And then the third year through 30
was fixed.
Was fixed.
So what difference on that payment? Because a lot of people are buying homes, they need to know what their payments are. They got to budget that in, right? So what would be the difference on your payment for something like that? Maybe your first year at 2% that he paid, and then the second year at 1%.
I don't remember what those numbers were. That was a long time ago. However, I just ran one the other day.
Okay.
And this was just a complete buy down for the life of the loan.
Okay.
So the buyer was $400,000. We took it from 6.25 down to 5.25.
Okay.
The difference in payment was almost $250 a
Wow.
month.
That's big for people.
And it makes a difference. And a lot of times, if you just ask somebody, hey, if interest rates were at 5.25, would you buy a house? Oh, yeah, I'd buy a house. Okay, they are. You just have to work with the right people.
Yeah, you have to educate, and you have to rethink the business.
Yeah.
And honestly, you got to be connected with your loan officers. A good loan officer is going to keep you educated. You don't have to constantly be reaching out. And a good loan officer will also keep in touch with their past clients and their potential clients to make sure they understand what they can and cannot do right now.
Correct.
So let me ask you this. Do you foresee interest rates? I mean, they've gone down a little bit, right? Do you foresee interest rates coming down any more this year?
That's a great question. If I had the answer to that question, I'd be a millionaire.
Yeah, me too.
Quite honestly, I don't think it's that important.
And why do you say that?
Well, I don't know the answer. Okay, and interest rates go up and down every day.
True.
What I do know is the fastest path to wealth is to own a home.
Is home ownership, that's correct.
So, and I can't tell you how many of my clients bought back in 12 and 13, and they bought one or two more homes since then.
Right.
So they've got in, the market improved, they grew their equity.
That's
They
right.
traded up.
They traded up.
So what I think is more important is buy the home you can buy today.
As long as you can afford it.
As long as you can
right?
afford it.
We always say that.
Like I said, there are ways to get your interest rate down. One of the things that I know you talk to your clients about, and I do too, is if, the 2-1 buy down versus the buy down for the life of the loan. If you really think you're going to be in that house somewhat short term, the 2-1 buy down might be better. Why pay all that money or take all that money from the seller
that's true.
and buy
That's
that thing
true.
down, and you're not going to live in that house that long, right?
Right.
So that's a conversation we have. But it's getting in the house. So however you can, get in the house.
Yeah, and I'll give you a little example. My son bought a house about a year and a half ago. Interest rates were higher than we wanted them to be at that point, okay? So we actually literally bought his down. We actually paid out of pocket, put a little bit extra money in there because his interest rate's 5%. He's not going to have to pay to refinance that either.
Right.
It's going to keep. Same thing with one of my clients that we closed, I believe it was October. Their interest rate, we bought the interest rate, or I'll say the dad bought the interest rate down, okay?
Right on.
But it was down to 5.14. Now their pain point was the interest rate, and that's why I have a hard time getting them into a home initially. But here's the thing. I said, you guys, you'll never have to, at this point for a long time, you will not have to refinance. I mean, obviously, if it goes way down, you want to refinance.
And you started this by asking me, do I think interest rates are going to go back down? Well, if they're already at 5, or you can get them at 5, what difference does it make?
It doesn't make any difference.
The change in focus for buyers is this: can you get a seller to buy down your interest rate on every home? Absolutely not.
Right.
So the homes that are move-in ready, priced correctly, those are still getting multiple offers. Okay, so the house that would be a good candidate for this is something that maybe is on the market for 30 or 40 days.
Correct.
Maybe needs a little paint, maybe needs a little carpet or flooring. It's not going to appeal to everybody, and maybe you're the only offer.
And that could just be your starting point. It doesn't mean you have to live in it forever,
Correct.
right? You got to start those baby steps as well.
Correct. And if you're not going to live in it forever, maybe you do the 2-1. It's
Right.
less of a credit from the seller. The other thing to think about is for buyers, especially younger buyers, typically they know their income's going to increase every year.
Right.
Say you're a teacher.
Right.
Well, you start here, next year you go up and you go up. So you take those first 2 years and help you get started, but by the 3rd year, your income is already raised. And so net, the payment might be about the same.
Yeah, your tax bracket changes too, but we're not accountants,
No.
so we're not going to give that kind of information. But we've also seen with that, as a buyer, you need to be a little careful because we fall in love with homes that are just ready to move into. We're all human, we all do that.
Sure.
And what I have found in the last few weeks, and I've been out a lot showing houses, is the houses that are priced right, turnkey, they're gone,
Yep.
and there's multiple offers on them. So those, if you really want to get your foot in the door, you might want to avoid those, even though we love looking at them.
Right.
Because you're just going to be disappointed in the end.
Yeah. And here's the other thing. If you're renting right now, you're paying somebody's mortgage. It's just not yours. So get in, especially a younger buyer. You can learn how to do things. YouTube's a great source for doing everything.
Right.
And learn how to put in flooring. Learn how to paint the walls correctly, and do those kind of things and build some equity, and then sell the house and move.
Or you can call your realtor, because your realtors tend to have a lot of those kind of people in our pockets that we've used.
Correct.
And we know they're not going to gouge you. Okay. So I guess my biggest point to all this, because this is really good information for a buyer, someone trying to get into the market, is don't be afraid to talk to somebody. Reach out to your agent, to your mom's agent. I mean, if you're one of my clients, please reach out to me, okay? Or if you're John's, reach out to him. But reach out and ask those questions. You got to remember, you guys, we all started there. Mm-hmm. We all started buying our first house, and we know how scary it is, and we know sometimes maybe the moment isn't right for you right now, but when you're with a good realtor and a good lender, you are going to be able to put a game plan together so that maybe 3 months down the road, 6 months down the road, you will be able to actually have that home that you've always wanted. And trust me, you can make a house look really good once you get in there. So that's my biggest. Reach out to your lender, reach out to an agent. You can reach out to us. We'll be more than happy.
Send us a message down below.
Absolutely. So we want to thank you guys today for joining us and having, well, we hope a little information for you. And we always like to have a good time.
What are we doing next week?
I'm not sure. What are we doing next week?
We're going to talk to a lender. We're going to talk about rates and direction. She'll have an answer for you about your which way the interest rates are going.
Yeah.
I think she's going to talk about some programs as well.
Oh yeah, we're gonna have all that for you guys, and honestly, our expertise is knowing just a little bit about where to guide you to talk to a loan officer, and they're the experts in that arena.
Yeah,
Okay,
absolutely.
we're the experts in getting out there and finding you a home. Okay,
So like and subscribe, and we'll see you next week.